All right, what the heck's happening with Ryder here? Yesterday morning, they beat Wall Street's earnings estimates, yet the stock got crushed, down 5%. Ryder's a company that many people don't really understand because they still associate the brand with the consumer truck rental business these guys sold off 2 decades ago. The Ryder of today is a leading provider of transportation and logistical solutions like truck leasing, fleet maintenance, outsourced supply chain management. They have over 30,000 trucks for both short-term and long-term commercial rentals. Give you a sense of Ryder's actual business? Okay, consider what they do for CVS. Yeah, the drugstore chain. Ryder provides CVS with hundreds of dedicated drivers, tractors, and trailers. They help meet the tight delivery schedules at CVS's stores and support its supply chain expansion. By outsourcing all of this stuff to an expert like Ryder, CVS saves a bunch of money. Meanwhile, Ryder's also increasingly doing business with e-commerce companies that require a lot of flexibility when it comes to transportation and logistics. Now, when Ryder reported yesterday morning, the company delivered a 3-cent earnings beat off of a $1.62 basis, a good number that somehow the market didn't care for because revenues weren't as high as what some analysts were looking for. So does Ryder deserve the punishment, or is it simply a misunderstood stock that had run up too much going into the quarter like so many that we've seen? Let's take a closer look with Robert Sanchez, the chairman and CEO of Ryder System. Find out more about the quarter and his company's prospects. Mr. Sanchez, welcome back to Mad Money.
Hey, Jim, good to see you again. Thanks for having me.
Absolutely. Okay, Robert, I want to understand. I mean, you added a lot to your fleet. You got a lot of new customers, and yet somehow people feel that your revenues weren't where they should have been. Is this just a misinterpretation by the market?
Yeah, I think revenue could be a little confusing because the total revenue line that you're looking at includes fuel, which we resell about 300 million gallons of diesel fuel to our customers. So as fuel prices have come down, that fuel cost and that fuel price has come down for us. It's reflected in lower revenue, and it's a lower price that we sell to our customers. But the profit margin it stays similar. So really, the top line being down is all due to the fuel cost and fuel prices being down.
All right.
If you looked at the operating revenue that excludes fuel, that was actually up 6%, and it was up 6% across each of the business segments.
Yeah, that's good because I think people were very confused because the revenue line did look very, weak, and I said to myself, uh-oh. But then when I read through the fuel, I realized it's passed through and that's a mistake. What I'm interested in is, even in the time since we spoke to you last, we mentioned CVS, when you're talking about e-commerce, I mean, the companies that are involved in e-commerce, they don't know anything about taking it from A to B. They just know about the product. So how is that working? Who are you working for? What kinds of companies is that? Is that omni-channel or is that standalone internet companies?
It's really both, Jim. I mean, it's any company that needs help on how to get products from point A to point B is where Ryder can come in and help. So sometimes we're working with traditional retailers and traditional companies that are now finding new ways to leverage e-commerce and to move into the e-commerce space and are looking for partners to help them do that. And then other times we're working with new companies that don't have the infrastructure and are looking for a company that can help them, that has some of that infrastructure and can help them build out and start up their e-commerce companies.
All right, this may seem to be an off-the-wall question, but a company that we've had on a bunch of times called United Rentals reported, and it frankly was a disaster. And I am wondering whether there are any complementary issues between Ryder and United Rentals, because United Rentals they took no prisoners with that one. And I was thinking, they said, oh, hold on, here's another rental company. They do the same thing. You don't really have a lot of overlap, do you?
Right. I think we got caught in a little bit of that downdraft because United Rentals rents construction equipment primarily, and they really were impacted, from what I understand, from the oil and gas sector, which had a meaningful part of their total revenue. At Ryder, oil and gas is only about 2% of all of our revenue. So our rental business actually was up 8%. And rental, by the way, is only 10% of the revenues for Ryder, as opposed to United Rental, which is a much larger percent. But our rental business is very healthy. We actually increased the number of units that we were going to add to our rental fleet because of the additional demand we had. So we're dealing with a much broader part of the economy and of a customer base, and really are seeing a very healthy rental environment.
All right, one last question. I want to talk about that health. There are a lot of people who feel like that just as the Fed may tighten this week, that the country itself is getting weaker. I see the employment numbers, they look good. I see Ryder's numbers, they look good. There's no weakness going on right now versus, say, 3 months ago, is there?
Yeah. Remember, Ryder is primarily North America based. So we're really dealing with product movements inside North America. And if you look across the typical things that we look at to gauge the economy, which is first and foremost our truck rental business, very healthy. Our truck leasing business, where customers are signing to long-term leases on trucks, That's very healthy. We are growing that part of the business more than we've grown in decades. And then our logistics and dedicated business, the volumes with those customers has come up nicely also. So really, from our vantage point, the economy looks like it's continuing to move at a pretty good pace.
Well, that's all we need. And I think that there was a kind of a guilt by association, frankly, because I know the space, and you have a lot there's no real overlap. Anyway, that's Robert Sanchez, Chairman and CEO of Ryder Systems. Thank you so much, sir.
Thank you, Jim. Thanks for having me.
All right, look, people think that this whole sector is problematic. That's not true. Ryder is not part of a sector. It's a service business that companies need. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.